Hey guys, Ted with GammaEdge here coming at you with a post-market recap for August 20th, 2025. Today had just a great V reversal intraday. So we're going to get into, how we got those key levels, go into our pre-market structure like we always do, then go through our intraday tools. See how that helped us navigate the action. So right, as always, pre-market prep, go through SPX-A, go through SPX-P, both the full complex, and the 0DZ complex. Right, thing we were noticing, SPX-A complex looked fine. SPX-P, though, we were seeing a bit of weakness creep into the structure, meaning starting to see a lot of, out of money puts coming in underneath spot price. Even seeing in the money puts starting to creep in above spot price. So that kind of out of money call speculation was leaving a little bit when factoring in the entire complex. Right, and even the GEX ratio for SPXP starting to dip below 1, definitely decisively lower on a trending basis from last week into this week. So right, for the short-term kind of bullish regime to kick back up, we want to see the action that we saw back in, the end of July. We're just seeing, a resumption of that trend higher. So right, but if we already get a market turn, this is how it happens first, right? First, the SPXP complex starts to deteriorate, then that creeps into the SPXA complex. Then right, getting into the SPX 0DT complex itself, first starting with our transition zones, key DEX GEX transition zones 6420, 6425. Tight, well-defined range, and then drunken to the range 64.25 to the upside. So right, 64.25 key level to the upside, downside 6400. So right, bull bear line 64.25 to the upside, 6400 to the downside. And then right from there to the upside, it's really just looking at the gradient or the distribution of speculation and how that is positioned up and down the structure for kind of those key upside levels. That is what these pink lines are supposed to represent, right? So from 64.25, we were starting to roll down the hill until we get to 64.50. So that's kind of the key first upside level. And then again, from 64.50, again, rolling up the hill until we get to 64.75. So that's kind of how the if-thens work to the upside, then to the downside, which remember is kind of what we were more inclined to coming into the session, just given kind of how the intraday, how the market trend model was looking, and just kind of how the evolution of the SPXP complex overall was looking. But again, that's why we have our transition zones, so we aren't too biased coming into the day to make sure that we're breaking above one side of the other, or we're just staying in between. And so, right, taking that same thing, looking at kind of a boulder rolling down a hill, just understanding the gradient of speculation below 6,400, rolling down to 6,475, which could be the first stopping point, or from there after 6,475, then 6,450. Ultimately, 63.30 was kind of key downside level, along with 64.20 as well. So again, that's why we have those if-then statements marking out those key levels in the pre-market. And then from there, it's really just watching how price interacts with those levels and then monitoring what the intraday transactions are via our intraday volume analysis and the market trend model. And so just recapping those key levels, how they looked on the chart itself, right? So the transition zone is what I have marked way up here, right? We have the hindsight of price and how that played out on an intraday basis. But this was 64.20, 64.25. Then we opened right around 6,400, right? Which was the key downside level of our drunken sailor range. And then, right, it was really just a collapse from there down to 63.75, really just blew through that. A little bit of interaction, and then 63.50, right? And then, from 63.50, basically V bottom higher throughout the rest of the session. A lot of interaction with 63.75, remember key level again. And ultimately, basically just a round trip on the day back to 6,400. Did we know we were exactly on bottom at 63.50? No, did not. However, there are a couple of things that we could have looked at to understand, especially when we're getting out of these levels. Probably not the best time to be shorting this far in the hole, given the move yesterday and given how extended we are from the transition zone on a 0DT basis. It's about the rubber bands being super stretched at that point in time. So you need the incremental put buyer really to come in to help continue to propel us lower. So a couple things I want to look at. First, looking at the market trend model, obviously saw a little bit of selling on an intraday basis. However, that really disappeared quickly throughout the session and, mostly just sideways the rest of the day. We have price action here in the neon green. So you can see once we started to be bottom there, the significant selling via the filter tick subsided. Further, this is our intraday volume analysis via the SPX 0DT volume calls on the green, puts on the red. So what we do is on a 5-minute basis, we aggregate that volume, do the distribution, find the middle point of that distribution, which is called a centroid, and we plot that. So we plot throughout the session to understand what the character or price action character of the speculation is on the day. Then we can also project out what the likely path of price is based off of what the centroids have been doing. So a couple things to note. Yes, I know we have the entire day here. This is hindsight bias, but that's fine because, right, in sports, always watch the game tape the day after the day after the game. So why would we not do that with trading as well? Pattern recognition, so we can apply this stuff tomorrow. So right, again, off the open, call speculation materially moving lower, put speculation materially moving lower. Then yes, right, at this point in the market, looking pretty nasty, right? Continuing to selling off, puts continuing to expand to the downside, breaking through 63.50. However, one useful part of this tool is this was the low on the day. Low on the day, once price started progressing higher, we started to see transactions via the puts starting to expand higher, right? If we were going to see continued downward movement, we would need to see continued expansion lower of the puts. Basically, this character right here continuing throughout the session. Go back and look at yesterday's volume chart. That's exactly what we saw, just a continuation like this all day. Today, obviously, a decisive V-bottoming and speculation itself. And so, yes, while you might not have caught this entire short lower, you also should not have gotten trapped short really much past this point in time. Reason being, again, a speculation started to trend higher. Market trend model again was trending higher. We were getting quite stretched in the overall structure on the 0DT basis down here at 63.50, considering that the transition was all the way up here at 64.20, 64.25, right? And then this point forward is basically, just kind of grinding action. Put speculation was really not ramping higher, basically a flat top call speculation, basically a flat top. Put speculation trending higher. This is generally a good signature of kind of a sideways to higher day is, flat with a trending higher there. So again, just pattern recognition, something to keep in your playbook going forward. Right, and then just looking at the interaction with our key levels on the other indices as well, SPY, QQQ, IWM. Yes, right, we had the massive V-ball out of them. SPY, SPX, looking at the same thing, but then as we progressed higher, we were making higher highs, higher lows on the session, not taking out negative GEX on the day. And then right, finishing here 639, roughly 6,400 on SPX. Right, the other thing that we were talking about, just situational awareness as well. This is all the Mag 7 components. Things we were noting is that all those components were below their P-trans level. So, in a bull market, generally you want your strongest components moving higher. That would be above P-trans. Certainly was not the structure today. So this is more just a situational awareness type of point, right? In the beginning of the video, we were talking about SPXP, SPXA overall, what those were looking like. So this is kind of another data point saying that the market is weakening a bit here. So, right, these are all things to consider going forward, right? Because we can't change what happened today's session, prior day's session. All we can do is change going forward. So from a Mag 7 kind of health of the market point of view, we want to see these price get above P-trans. We want to see the market trend model started to reverse at the end of the day. So we really want to see this carry forward, get back above the moving average, the rainbow ribbon, moving average ribbon, starting to see filtered tick buying on the day, starting to see new highs outpace new lows. So, right, we've had a little bit of short-term turning to the downside, but, it's the exact opposite that we want to see getting back to the upside. Or if we're going to see further downside continuation, it's basically a trend that looks just like this, that just continues down. This could simply just be a lower high being put in, right? And we want to see a continued deterioration of the SPXP full complex, SPXA complex start to deteriorate as well, GEX ratio start to continue to regress lower, all that good stuff. So you guys should be comfortable kind of using our tools, what we're looking for from a multi-day to multi-week swing trading time frame, see if the market is healthy or not for those. And then right from an SPX 0DT point of view, should be clear kind of how we go about getting our pre-market levels and then how we're using our tools intraday to interpreting the price action in terms of those key levels and how speculators are transacting throughout the session. Last point I'm going to make real quick is because we are the sponsor of this video, that GammaEdge.us, go to free courses, GammaEdge FastPass. This is our entire methodology, market trend model, tool, vol, M tool, all those things we went over today. We teach you exactly how to use those in articles that are easy to follow, easy to read, and give you actionable takeaways that you can implement tomorrow. So what I encourage you guys to sign up for this, kind of read it at your own pace, but it'll be worth your while if you're kind of new to the options markets, new to GammaEdge, curious how this may fit in with your existing trading strategy. And if you have questions, come on in the Discord because our admin team is in there all day, every day. We also have a great community, moderators, a lot of good contributors in there as well. So your question will get answered and get answered promptly. So with that, I appreciate the time. You guys have a good rest of your night, and we'll see you tomorrow. Thank you.